Hello friends. So far, we have covered the basics of how mutual funds work and the benefits they provide. Next, we need to understand the different categories of mutual funds. To keep things simple, we can just think of mutual funds in three categories: equity funds, debt funds, and hybrid funds. Like the name says, equity funds invest only in stocks. They have the highest risk as stocks are inherently more volatile in the short term. Hence, we should only invest in them for the long term. They give us exposure to the underlying economic growth because if the Indian economy does well, then stocks tend to do well. Their objective is capital appreciation, which means that they aim to give you some profits when you redeem your units. Now, a question here: what do we mean by long term? Typically, 5+ years is considered to be long term. At a minimum, we should have at least a 3-year horizon when investing in equity funds. So if you think you may need your money back before that, it's best not to invest in them as you can end up with a loss too. Debt funds invest only in bonds. Essentially, they lend money to private companies, public sector units, and other government agencies. And they earn an interest which they aim to pass on to investors like us along with the principal amount. They are much less volatile than equity funds as the volatility of bonds is typically lower. Their objective is to provide regular income to investors rather than large profits. We can think of investing in them for the short term, say 3 months to 3 years. Now, equity funds and debt funds are at opposite ends of the spectrum. Lastly, we have the hybrid funds which fall in between and have a mix of characteristics of both equity and debt funds. They give exposure to growth by investing part of the money in stocks, but also provide income as they invest the rest of the money in bonds. So the returns may be a bit lower than equity funds, but the risk of volatility is also correspondingly lower. We can look at them for a 3 to 5 year horizon, and they are suitable for first-time investors like yourself. Hope this gave you a good idea of the different categories of mutual funds. I am Vinod Bhatt, and my aim is to simplify the world of finance and investments in a simple language that anyone can understand. Thank you.